It's May 29th, and this is the video that takes 30,000 to a million. I'm going to talk about the account. I'm going to review all the positions from Friday because I didn't make a video on Friday, I think. And I will show you the exact status of the account, and there's been some changes, big changes. So you get to see that. And after that, I want to talk about this incoming rally that we've been having in the last 3 days. Definitely was the case of the reversal Tuesdays on Tuesday, that's for sure. It was a massive reversal Tuesday. And then I've been talking about this all week. I've been so excited. So Wednesday, Thursday, and Friday, all green days, especially Thursday. But Friday for me was also a really nice day, and I was able to deleverage a little bit, which some of you may be less nervous about now. But I probably will lever back up as soon as the market resumes its downtrend. For right now, I'm trying to raise cash or at least credit, like availability of cash, because the account is still in the negatives, obviously, because of borrowed money. But after that, we'll talk about the bear market rally that we're experiencing, why it's a bear market rally, or is it, and what's the likelihood of this bear market bottoming out, and we'll take a look at the graph or two. So going into the account, I'm sitting at $178,000, which is a big improvement from just a few days ago. Let's see. Take the week chart. It was all the way down to 153, so that's $25,000 higher. It's a considerable amount, not just in dollar terms, but in percentage terms. So it's a big snapback here. You can see the Monday, positive Monday, then boom, Tuesday, Wednesday, Thursday, Friday, all the way to 178. So 11% up on the week. Flipping through the options side of the account, you can pause the video player at any moment to try to figure out the exact positions. All the information you need is right here in this little box. You can see the ticker and everything else in there. So the numbers on the right are the daily change in valuation. In white are the dollar amount, and then in the red is the percentage for the value of the option itself. You'll see that I have quite a bit of option sells that are short term, which is where I make like the bread and butter of the account, most of the account, or I guess the meat of the account. Bread or butter, meat, veggies. I don't know what the biggest portion is, but so that's where most of the money's made. Then I have a bunch of leaps that I've bought, mainly on Chinese stocks, like ADRs, I should say. I don't know. ADR VIEs. So like Alibaba, JD.com, VIP shops, and that's about it. Oh, and then I have a couple buys on PayPal, which did all right today. The leap was up 20%. I think PayPal was up a little bit, maybe over 5%. But I have 130 calls expiring a couple years from now, so hopefully, well, a year and a half from now, a little bit more. So hopefully PayPal comes close to its previous valuation in that time period, which I'm obviously betting that it will. Further down, we'll find the stocks. All the equity positions are listed here. You can see Apple is up 4.33%, which is very good. It's a very big increase on Apple. $4,000 of that alone. And then because of that, a bunch of option events were triggered. I will go over them in a second. And then JD up 2%, VIP shops 1.5%. Realty income up a couple percent. Everything was green. Main Street Capital up over 2%. I have quite a bit of Main Street Capital now. So more than realty income, I think, in total value. Goldman Sachs, I only have 30 shares, if you notice, not 245. So I've reduced Goldman Sachs position quite a bit. And no, I did not sell at a loss. I actually collected premium off of that. So I'll show you that too. Smith & Wesson was up again, just a tiny bit, 0.5%. I really wanted to stay above 15 so I can get rid of this position, so I can use all these $18,000 of capital to sell puts on a different company, perhaps. Maybe the same one. If Smith & Wesson continues its bear market, maybe I can sell to the same one, but we'll see. Back on the account, sorry. Quick distraction. Over here at the tail end, I have DIDI sitting at a 10% gain, really big gain. And then uranium mining stock, Energy Fuels, sitting at about a 2% gain. If we go over here on the investing tab, you're going to see that my total market value has shrinked from 300 and something to 221, mainly because of reduced leverage by a tremendous amount as a function of the market rising rapidly. It hit a lot of the stops that I have, right? And the stops are set by my options. And so now going from 48% margin to only 20% margin. So I've reduced it quite substantially, maybe by $100,000. Here are the equities by rank. You always got to factor in the options when dealing with this, but you'll see that there's a couple more companies in the green now. Actually, Goldman Sachs is in the green and DIDI Global in the green, $12, but I only have $122 in there. The reason I hold DIDI is because I'm curious as to what will happen whenever they delist from the US exchanges. I want to see them go either to OTC or I'm really curious. OTC means over the counter, which means traded outside of the main exchange's interbank, but it will still display on apps like Robinhood or other brokerage houses. So I'm really curious how they handle that process, and so that's why I have those shares. It's not because I'm like trying to make some major profit of this position or whatever. Okay, so moving on down, I'm going to sort it by equity. You'll see that I have exactly $100,500 in Apple equity left. And I think only one call sold against it. To find out the exact position here, I'm going to click on Apple and scroll down. I have not had anything to drink. Actually, that's a lie. I had a drink or two at lunch, which was about 5 hours ago. So, I have 670 shares. I have one call sold against Apple that expires next week, next Friday. And I actually I used the roll function to place this position because it was expiring almost worthless on Friday. And so because it was so close to the strike price, somewhere around here at 149, I decided to roll it because I didn't want it to expire and have that unpredictability of whether, okay, is it going to actually expire worthless or is it going to, trigger. And it ended up at exactly 150, which is $1 above my strike price. So I just decided to use the Robinhood roll function, which is the only time I actually found it useful here. So you can see here, AAPL short call roll. And this is what happened. If you want to look at the documentation, you can see that there was a limit price that I set for $212. And then quantity 1, the status filled. So there's a time limit buy and a time limit sell. Okay. So limit buy and a limit sell, excuse me. So I sold the contract for $18 and I bought a contract for my contract back for $18, and then I sold a new one at $230 for a net gain of $212. So you can see how the roll function happened here, but I generally don't like to do that. I only did that to guarantee that I'm going to have something going over the weekend in case there's a big drop in Apple. I wanted to make sure that I benefit at least a couple $100 over the weekend. Otherwise, I would prefer to let it expire. Now, on top of this, in other news, Apple limit sell. I saw some additional Apple shares, 10 shares to be exact, and then some of the contracts executed, and I guess it's not showing here really. That's interesting. But the bottom line is that I now have $131,000 that I can play with. Only $10,000 in collateral. Only 43,000 margin used, and you can see buying power is now 131. So I can do a lot with that. I can buy some stock short term. I can sell some puts. I can do whatever. I can just keep it. I'll probably not do anything as long as the market's going up. If it comes back down to these levels and dips below, I'll probably get aggressive again, start selling puts, probably Goldman Sachs. Might even sell some puts on Goldman Sachs on Monday. Depends what the market does. If it has a down day, I might do that. So that's the buying power tab here. What else can I show you? What's my watch list doing lately? Okay then. Very interesting. I'm really interested in US Steel at the moment. Let's see how that's doing here. Okay, not bad. Had a green day today. Some of the lowest P's ever. Price to earnings ratio of 1.54. But don't rush into it, okay, because the earnings side of that equation is probably going to drop if everybody is correct. Okay, that is the account overview. Now let me pull up a chart of the SPY real quick, which is an exchange traded fund that tracks the S&P 500, the most profitable, biggest combination of profitability and size, most well-off profitable companies in the United States. I think in order to get into the S&P 500, you need 4 consecutive profitable quarters and the required market cap size in order to get into this index. Up 2.45% today, or not today, I'm sorry, on Friday, which was when this closed. And a chart that tracks my account, really, except not as volatile. Now, a lot of people calling this a bear market rally. That's probably exactly what it is. I'm not really going to disagree with them. What is a bear market rally? Well, a bear market rally is a upward movement in the market, especially in the indexes, that is very sharp in nature, and it does not signal an overall trend reversal. It's different than like a capitulation engulfing candle or something like that. It's typically, it's kind of a head fake. So when the stock market is going up, you say kind of like there's this saying in the markets where it's like you take the stairs up and the elevator down, right? So the sell-offs are really sharp, and then you do really small incremental gains on the way up in a bull market. But in the bear market, that dynamic reverses in general. So you take the stairs down, and then you take an elevator up, and then stairs down again, etc., which is exactly what started happening here ever since last year, December. There's been stairs down, and then boom, a really, really aggressive, like 1 or few day rally. Elevator up, then stairs down, stairs down, stairs down, stairs down, stairs down. Boom, really aggressive upward movement for a few days. And now we've been taking a lot of stairs down. And so this move could be fairly aggressive. It could probably go up another, 5% or something up from here. At which points, everybody will expect the downtrend to continue. And I'm not going to disagree with them. I don't know for a fact. I'm not a technician. I don't know how exactly it's going to go. I'm going to try to take the market at its word and not be overly aggressive. I'm aware of the reflexivity of the markets, but I'm not going to assume that the market's going to resume a bear run or a bear movement, or I'm not going to assume that it's not, right? So I'm going to try to wait for a reasonable reasonable price where that's close to the strike price, where I can start selling some options again. I'm going to try to look for a difference between implied volatility and actual volatility. Like if the volatility is really high and the IV is really low, then I'm not going to sell, right? I'm going to wait for a better opportunity, at least sell in some company that is not as tied to the index, at least from, volatility arbitrage standpoint, which is exactly what I'm trying to do here with these option contracts. So Anyway, so that's enough talk about the bear market rally. Everybody's calling it that. I'm gonna call it that. We'll see how long it lasts from here. Let me see what the Nasdaq bear market rally looks like. Oh man, this is a fairly crazy day here. 1 week. Let's see the year chart. It's quite tiny, so we'll see. It's nowhere near this sharp reversal on March 14th. So we could expect something like that probably. I'm guessing maybe twice the size of what it's done so far. Usually these kind of bear market rallies are about 50% retracement on the way up of the territory being lost. But anyways, that, oh man, I can't believe I've been showing my face this entire time. So here's what I mean. So 1 year, this is my account, not the Q's. Okay, this is the 1 year chart. Here it is. This is what I was talking about. This is a very sharp reversal. So far, we've got just a little bit of an uptick from the Nasdaq. And I expect it to continue for a little bit further. It looks like on the SPY chart, it looks like it might continue. And the Nasdaq chart, it looks like it will probably continue for a little bit further. Maybe taper off a little bit. But look, I'm not a technician. I'm just going to wait for fair prices. And I really only care about like IV arbitrage when it comes to selling the options. I don't want to sell something at a low premium when things are really volatile out there. So if the premium pays me enough, I will enter another contract with Goldman Sachs or Apple or something like that. Because I've been selling puts and then calls on Apple, which is something that I don't normally do because the IV has jumped enough to where it's worth it now. But before that, it wasn't. The company was way too stable and it wasn't rewarding me for writing any contracts. So now I'm trying to, Goldman Sachs is still a good deal for me. I think that the company is nowhere nearly as volatile as being priced in. So it's still a good move for me. But Apple is actually catching up, with the implied volatility there. So, all right. So those are my plans for the future. Massive decrease in leverage. Still expecting the bear market to resume for the most part, but it doesn't really matter. I'm just gonna look for good entry points because all I care about is IV arbitrage. But let me know how you guys are doing. I have a few videos for company reviews to do already. If you want to review a company, you can leave it in a comment below, or just let me know how you guys did when the market's on Friday, whether or not you had a good week, or if you were scared on Tuesday and fell for that reversal Tuesday. All right, peace out.